Hello everyone, in this video I want to discuss how I use multiple prop firm accounts to generate profits and control risk. I rotate them a certain way, I use a copier under specific conditions. So I just want to explain here what I do and the logic behind it. So in our live trading room, all you see is just one chart. But in reality, I have three computers going and a laptop because I have 27 SIM funded accounts. Now, I do not trade all of them on any given day. For the most part, on an average day, I trade between 5 and 12. It really depends on what the market is doing, if there is enough movement, and if the market is what I call predictable, like this morning was very predictable. If the market is more predictable, I'll trade more accounts. I will copy more accounts. On days when there is not a lot of movement and the market is a bit more difficult to read, I will just trade maybe 3 or 4 or 5 accounts and just be done with that. Now, I have no formula to offer as to how many accounts should be traded or copied because the fact is every day is unique, every situation is unique, and it all depends on what is going on at any particular point. So let's take this morning for example. If you were in the live room, you know I was very bearish. I expected a move lower in both the S&P and Nasdaq. So when I am very confident about a move and the market confirms my trade idea, then I would copy 2, sometimes 3 accounts trading this particular idea. For example, this morning, again, I was very bearish. The market broke below and then came up right here. You see this? And retested the entry point to the tick, right? This is a major US level. I teach this in the course. Here is where the decision is made. When they came up and they immediately failed, this was a short. In the room I was saying, if they retest 315, between 310 and 315, and they fail, it's a short. So when this happened, I not only took the trade, but I actually copied that trade onto 2 other accounts. I only copy when I am very confident that a particular move is going to take place. So this chart generated this amount of income and it was copied onto 2 other accounts. Now, as soon as I close the trade, and I make sure, of course, that in the trade copier everything is closed as well and all the orders have been canceled, I switch accounts. I do not now trade the same account. What is the logic behind that? Because I never know what's going to happen from that point. But I know that I have this much profit in this account. So no matter what, if I now switch to another account, I know this profit is secure. And even if my next trade idea does not work out, at least I have profit in this account. Now, in the room with the S&P, it was a very similar idea, with one small difference. S&P attempted to get to this target first thing in the morning, right out of the gate. It attempted this target. What I said in the room was, if they cannot get to 11, 68, 11, or 13, they would reverse very quickly and go down to 94, mid 80s, and then 76 down to 72. And the reason I said that, those of you who took the course, you guys know, when the market attempts a target, right? Because 90% of the time, targets are reached, either the upper target or the lower target. When the market attempts and can't quite make it, this is a miss. When they miss, it's foreshadowing that they actually want the other side. They actually want this. So in the room, I took a short toward 94. Again, I was very confident about that move, and once again, I copied that trade onto two other accounts. But you see, this is a different account, and that's what I mean. I do not use the same account. Win or lose, doesn't matter. If I take a loss, I switch account as well. If I take a win, I switch account. I constantly rotate because I make sure in a case of a profitable trade, I get to keep that profit. In the case of a losing trade, I don't need to blow the account, right? So I constantly move these accounts around. And because I was so confident, this trade was copied onto a number, I think two other accounts. But again, there was another opportunity here. There was another opportunity, just like the Nasdaq. S&P broke below the midline, retested it from below, and then failed. That's just a short, and the target is here. So after generating this profit and copying it to two other accounts, once again, I switched to another account when the market reached 76 and then 72. Those two prices today were very important. Again, I discussed everything in the room ahead of time. I said once they get to 76 and 72, they will probably react back up toward at least 83. So now here is what happened when they got to 76. So again, I switched to another account, right? But I was not as confident about the move toward 83 as I was about the move down. That's when I did not use a copier. So just to make it clear, yes, I expected 76 or 72 to hold for the move back to 83. But as far as probability goes, I was not quite as sure about that as I was for the move lower. And this is obviously a weak market. And so there is more risk, in my opinion, going long because at least temporarily, and I do think it's temporarily, the market is weaker, testing key levels like 76 and 72. Now, in the room, in the same account, I did take a long at 76 and then at 72. I was scaling. However, what I actually do in my accounts that I'm not showing in the live room is I do not take them in the same account. What I mean is one account would be long at 76. Okay, one account would be long at 76 and a different account would be long at 72. So I'm not scaling in because in the room all I have is just one chart. So I have to show that. But in my other accounts that I'm not showing in the room, I actually take only one long, 76. Price comes down to 72. Fine, I'll take the long at 72 in a different account. And the account that took a long at 72 takes a profit at 76. Now, what's the logic behind that? Understand that 76 is a level and 72 is a level. Once you break 76, right? It was supposed to be resistance, but we broke below it. I'm sorry, it was supposed to be support, but we broke below it. When we come up to it, it could be resistance. And my idea is I always want to be in profit. I want to collect as much profit as I can. So the account that's long at 72 takes a profit at 76. Yes, it's only 4 points. It doesn't matter. It doesn't matter how many points it is. I want to be in profit. Now, the account that took a long at 76, that one is going to try and hold it to 83, but as I said in the room, fade it. So like I would fade it at, let's say, 81. Because even though I expect a move to 83, and indeed there was a move to 83 and a bit higher, I still want to be sure that I get out with a profit. So I would kind of fade the actual target of 83 with like an 81, 81.50. And again, the long trades were not copied to other accounts because no matter how sure I am of the move, the fact is it is kind of against the current trend, which is down. It's just that 72 and 76 are the kind of prices that even if S&P spikes it a bit, they would form up and go into the 80s. And one of the reasons, of course, I was so fairly positive about the 83 is because of this level. The US level is at 86, and very often what happens is when price breaks below, it would still retest it from below. So if I start combining a few things together, the knowledge of 76 and 72 with the idea that there is a US level at 86, then this together gives me fairly good confidence that we should see at least 83. But again, it is against the trend. Those kind of trade ideas I do not copy onto other accounts. Later on, there was another attempt. So you see what they did was they tested the target level from below, they failed and did 72 again, and 72 held again, and price once again came toward the US level. So plenty of opportunities both on the short side and the long side. And what I'm saying is, at least what I do, I constantly rotate and change these accounts because yes, they held it, and hindsight is 2020. Hey, why not copy 10 accounts and then make it go from 72 to 83 again? Because in real time, obviously, we don't know that this is going to happen, and I don't need to put on so much risk. So by rotating accounts and being selective as far as my confidence in a particular price movement, that helps me secure profits and limit risk. I can really press it when I'm very confident about the move, or I can scale down. By scaling down, I simply mean I don't copy these trades. I can participate in a probable move, but if I don't have a great degree of confidence, I will just trade that one account. All right, so yeah, just wanted to give a quick summary of today's price action, what we did in the live room, and just discuss how I rotate accounts to maximize profits and limit risk. If this helped you, as always, please leave me a like, make sure you are subscribed, and come and visit us in our Discord group if you did not do so yet. So thank you all. I'll see you next time.